Yeah.
Good evening, everybody. Welcome to the Town of the Paws special meeting for October 28th, 2025. Just like to again acknowledge that we're meeting tonight on Treaty 5 territory. With that, I'll just call the meeting to order. Just as a note, all councillors are in attendance with the exception of Councillor Forster. Somebody should have a motion to adopt the agenda.
Myself, Secretary Councillor Allen, well, the agenda be adopted as amended. There was one personnel issue to be added for in-camera session.
Yeah.
With objections.
Is there any comments or concerns? Seeing none, call the question.
The in-camera addition related to what we discussed yesterday?
No, it's our in-camera discussion, our CAO had the presentation she would like to share with us, so it's a sort of like an annual review.
Okay.
So yeah, it's not related, and that's what we'd be only talking about.
Okay.
Any other questions or concerns? Seeing none, call it. All in favor? Opposed? Nobody? Okay, so thanks to Dion for attending tonight from Baker Tilly, right?
Yep.
So the purpose of this meeting tonight is to present the 2024 audited financial plan for the Town of the Paw. I guess I'd like to start off by acknowledging the great work our staff has done so far to date. We had a very glowing letter on all the work that they've done and how the report came across this year, I believe. So thanks for that. And what we'll do is we'll pass it over to you for the presentation, Dion.
Yeah, right on. So I wanted to go through the draft audit, which can be finalized after council approval and signatures. And then there's some smaller pieces of reporting that go along with the standard audit package. And this year, we decided to do a bit of supplementary analysis. Okay, we did a bit of extra supplementary analysis, which is kind of the colored prints on the desk in front of you. Just because we're thinking about this going, what's the big picture? Where has this ship been headed? Where is it now? And I think that's just useful context as you go forward. So what I'd like to start with are the draft financials themselves. So, sorry, I don't know your first name. I mean, if you could exit over this document, and there should be a couple of others. Yeah, try that one. Next. Keep going. Yeah, that's the one. Okay, so we'll start with the draft financial statements themselves. And in the interest of time in your agenda, I'm going to focus on the high notes. But if you want more depth on anything, please reach out and I'll speak to it. So if you can go to the second page in, Ravi. Keep going. Yeah, that one, that's good. Do you have this on your devices or are you referencing the screen? Okay.
I don't have it.
Okay. So the first thing, this statement of responsibility is something that we'll sign at the end of the presentation. And I do like to just note this. So something that's important to know about audits and financials is that I'm the one bringing you the audit, presenting it, but they're your financial statements, not mine. Management of the town is responsible for ensuring proper books and records, good financial practices, and fair presentation of the financials. So in any public sector statements, it's a requirement to have the head of management sign off on that responsibility. So that page is just iterating that responsibility for financial reporting and management of the town. So then we move into the independent auditor's report. Here, what we've got is an unqualified or a clean opinion on the financial statements. So what that means is that we feel that these financials present a true and fair view of where the town was at for December 31st, 2024. Within the audit report, there's another iteration of the responsibilities of management and those charter of governance or town council. So management is responsible for the financial statements, and the role of council is to provide governance and oversight of the financial reporting process. Next page, please, Ravi. As far as the audit goes, primarily what we're here to do is to provide reasonable assurance of whether your financial statements are free from material misstatement due to fraud or error, and to issue the audit report. So in doing that, we look at what could go wrong here and complete a risk assessment and design audit procedures around that. We look at internal controls or processes and layers of approval and designing audit procedures. We obtain sufficient appropriate audit evidence for the town itself, and then as well as consolidated entities like the CDC would be an example of one. And we look at accounting policies used, estimates, and going concern, and then we look at the financial statements as a whole. We do audit around the materiality thresholds. We look at what would be mathematically significant, either as one-offs or many smaller things, to somebody looking at your numbers, trying to understand the town's financial position and activities. And here we feel that these numbers do present a fair view of where the town was at financially. Next page, please. And one more. So what we've got on screen is a statement of financial position for the town. So what this is a snapshot in time of what the town owned, what it owed, and then what the net debt and the accumulated surplus was. The town had about $7.8 million in cash, down from 10.6. Amounts receivable were around 3.6 million, up from 2.6. Real estate properties held for sale were around 428,000. Other inventories for sale, 495,000. And investments were 1.5 million. This year, the town did move into a new investment arrangement with RBC. So that big increase is primarily the movement of funds into that new investment. Accounts payable and accrued liabilities were 2.3 million, down from 3,027,000. Severance and sick leave payable about 52,000. Unearned revenue 2.2 million, down from 3.8. So something that had been a longer run thing here had been a build of the fuel tax funds. And in the past few years, there's been more leveraging of those dollars to go and get paving and other things done in the community. And we did see a fair drawdown on that in this year. The next number is asset retirement obligations. If you remember my scintillating presentation from the last audit, this is things like asbestos remediation. For the sewage lagoon, there's requirements legally to do certain things when that facility is eventually decommissioned. And that estimate is 3.85 million is today's obligation based on several assumptions of what might happen. That's kind of a fun number. There's a lot of estimation and assumptions that goes into it. It's definitely a real thing, but nothing that anybody's going to give the town a bill for next year or anything. It would come as certain facilities ultimately get decommissioned long into the future. Long-term debt under debentures down to 5.3 million. So there were no new debentures in 2024. And in that year, there was a capital lease done for certain fire equipment. So that's carried on the books at 267,000 liability.
Beyond that, 5.3 million for long-term debt, is that, that's the lagoons, is that the lagoon debenture? No, there's not a debenture, there's a debenture there, but it's being paid by,
By the utility.
yeah,
Yeah, so there are three debentures for the general fund. One that would be, the final payment would be actually December of this year.
yeah,
A second one on the general fund, the final payment would be December of this year, so those fall off the books. And then there's a third one, with payments in 2025, 26, and 27. And I would have in my records what those were, but I can't remember off the cuff. And then there is a larger debenture for the utility fund.
Yeah.
And that's at 4.4 million.
yeah, I
And
believe
yeah,
the
the water
majority,
sewer billings would pay for
yeah,
that.
a majority, the majority, I'm just for the general public, the majority of our debentures that are left, they're coming due this year, they wouldn't be at 5.3 million, but, which is what, anyways, yeah, so the taxation part of the debenture for the, like, the sewage lagoon is based on your utility bill, not based on your tax bill.
Yeah, that's correct. So the intention with the utility fund and certainly the Public Utilities Board is very interested in ensuring that remains the case.
Yeah.
Is for water and sewer rates to carry the full cost
Yeah.
of providing that service to
Right.
ratepayers. So the majority of that 5.3 million, you're correct, it's not supported by property taxes.
Yeah.
It's supported by water and sewer bills across the community.
Yeah.
Right, 100%, and that's why the water bills have increased.
Okay.
Yeah. Yeah, and we can talk about that a little bit more as I go for sure. There have definitely been some sustainability issues with the utility fund. Just one last comment maybe here on a few things. So usually when I present statements for a government, the number of net financial debt is probably the most important number in the whole document. And what that is a measure of whether you need to take future dollars to pay for past obligations, or whether on the whole you've built up funds that can be used for future things. So I guess if it's a negative and a big negative, it's a sign of financial challenges. Or if it's positive and a big positive, you know, you've got a pretty large bankroll there for future needs. And here that number has improved from negative 2.5 million in 2023 to negative 293,000. So the town's financial position has improved year over year. And with that asset retirement obligation for asbestos and lagoon and the other things, you know, that's a real thing that someday long into the future will need to be done. But, you know, up until the reporting change, it wasn't something any government had to book in that way. So when you remove that thing, I guess where I'm going with that is there has been financial progress here, and in that colorful graph that's printed out, I can speak to what the trending has been, but the town is in a better position than it was a year ago financially.
And I'm fairly confident to say that, you know, the life that we have left in those assets that require that, asset requirement obligations,
Yeah.
there will be other programs to support that, external to ratepayers.
Yeah.
When it comes, like, for an example, if we were going to close our landfill down, there's granting opportunities to modernize and cap and stuff that can help cover some of those obligations. So, but it's good that it's on the books.
Yeah, agreed. And I think in most cases, pulling those assets out of service would generally be driven by a new asset
Yeah.
being built, and it's generally, you know, the retirement of the old one is almost capital budgeted as part of the new project in certain
Exactly.
respects.
Yeah.
So, and the reporting standards require this to be on your books, but it's something to just have an asterisk about when you're looking at the town's financial position.
Yeah.
Because of the reasons you cite and because there's no, invoice coming to be paid on that in the near term.
Yep.
Yeah. Okay, good. Next page, please. So the next page goes through the statement of operations. So what this shows is dollars the town brought in and what the money was spent on by category. So here for the town of the Paw, in common with most municipalities, property taxes is the largest source of dollars flowing into the town. So those were just under $7.5 million, up a bit from 6.9 the year prior. Grants in lieu of tax here were 1.2 million, up from 1.1. So what that ties to is where Canada or Manitoba or certain enterprise organizations underneath those other governments have properties within the town of the Paw. The money comes as a grant in lieu, and those were higher as well. User fees are made up of different things, many different things. So landfill tipping fees, arena rentals, wellness center memberships or drop-in passes, all those sorts of activity-based things the town does. And that was 3,037,000 up from 2.97. Other areas, permits, licenses, fines are a smaller one. Investment income was around 378,000. Other revenue, 694,000. Water and sewer, 3,017,000. And provincial grants at 1.8, down from 2.2, and those vary depending on just different programs the province has at the time. And other grants.
Under the other revenue, it's up 300,000 from the budget. Where did that come from offhand?
I don't know offhand. I would have to dig that out of our files, Councillor.
Oh, it just seems
Yeah.
budgeting 300 and 700.
Off the top of my head, I believe there was some granting that we got through the CSO programs, or is that 23?
Okay.
I may be able to look at that while I carry on, so I can circle back to that towards the end, if that's okay.
This our new target next year is 700,000, that's what you're saying, right?
It's just a question.
Yeah,
Yeah, I'll have that information, just.
It's not critical. I guess correctly assumed that their chief financial officer would have been here this as well for this. If not, so.
Yeah, moving down, so overall revenue was 19.2 million, up from 18.3, and then expenses here were 16.3, down a bit from 16.7. What's important to know about these expenses here, they do include depreciation, so that skews the number a bit because it's not an annual cash outlay, your infrastructure getting older. And this annual surplus at the bottom of 2.96 million, frankly, is a difficult number to really interpret because of the way these are required to be put together. A better analysis of that flows on the next page.
so when you look at this sheet though, what I take away though is that we did see increasing in revenue more from the grants that came in from the provincial government. That was increased there, right?
Yeah.
And then on the expense side, the big change was the RCMP costs were significantly lower than we actually had budgeted. So that came in like $500,000 less than what we're projecting or something. On the high level numbers. I know there's a lot of other details.
Yeah, I would say all those things are true, and yeah, I can't fault any of that analysis. So here we're showing a surplus of 2.9 million, but unfortunately that's not the best number to look at, even though it is technically presented in a correct manner. If we go to the next page, please, Ravi. So on the next page, basically we take that surplus and adjust it for depreciation on capital assets, new capital assets that were bought, and changes in inventories and prepaid expenses. And here we can see, the town's net financial debt improved by 2.2 million in 2024. And in 2023, as a comparison, it improved by 937,000. So
When you look at the depreciation of the assets that we have, would they already be fully depreciated, like most of our buildings and that type of stuff, or is it not the same?
some are, some aren't. So I know when you look around, the town, certain parts of the infrastructure are quite old. Others less so. So yeah, some are, some aren't, I guess. Yeah, some are fully depreciated. some
What is our
aren't.
annual depreciation amount that
So
we charge?
the aggregate charge this year was $2,020,000, or was 2.25 million in the prior year. And then in terms of like how that gets computed, if you can move 1, 2, 5. Yeah, if you move to a page that looks at this. Yeah, there, you went past. Yeah, so again, here with this, there are certain rates and lives assigned to different assets. So something like buildings, they can range from 10 to 30 years, vehicles 5 to 15. Roads, the surface 20 years, the grade underneath 40. And kind of those general rates are consistent between municipalities. So most of this feeds off of a document the province prepares that's intended to be the foundation for municipalities to prepare their financials. And then your chief financial officer, where there's latitude within some of those ranges, would be the one that ultimately determines, on a 10 to 30, whether it's 10, 15, 20, or 30.
And when it's fully depreciated?
Yeah.
But
When it's fully depreciated, it would remain on the books just to show that it's still part of what you're using to provide service. And then when something is disposed of, so I know good examples, like I think there's been other years where you've, bought a new grader and got rid of the old one, so then the old one would come off the books, with the new one coming on. But hypothetically, if you hung onto that old grader or whatever, or whatever, it would stay on the books even if fully depreciated.
Like in general financial statements,
Yeah.
depreciation is used to defer tax. We obviously want to do that. So in this case, it's used just to show our net value at the end of the day.
Yeah, it's the intention with it is to align the cost of providing the services with the resources being produced to do that. And it's to show the aging of the assets and just how something new turns into something with no use in the long run. And yeah, the rates are all fairly standard, and anything done here is within the accepted ranges. But yeah, the business world, a lot of it, there's decisions made around tax. Yeah. So if you can move, we're just gonna go out of that one document right now for a minute, and then we're gonna look at this graph. You can pull that up. Okay, so what this graph is, as I was preparing for the presentation, I was just thinking to myself, like, a year's numbers are great. It's good to tell you what happened for the year, but what's the bigger picture here for the town? How has this changed over time, and what has the longer run trending been? So where I spoke to initially about this one number being the most important number in the whole set of financial statements, what we did is charted out that number from 2009 to 2024. And in the reporting standards over that time, there's been a few things that have changed. So we adjusted for those things, so it's apples to apples across that whole quite lengthy period. And what you can see here, like if you start on that, is the town was really in a tight financial position for most of 2009 up to about 2015. The town's net debt was basically negative through that whole time, and there were just difficulties financially generating more traction. And you can see,
Would have that been based on the fact that they were carrying heavy debentures on like the wellness center, arena upgrade, those type of
it would
things?
contribute to it for sure, yeah, capital projects, absolutely. So you can see things were really bumping along and just barely holding, but negative. And then you can see in 2015, 16, 17, 18, 19 and onwards, you start to see a build in the numbers. And then boom, in 2022, the lagoon project happened and it basically dwarfs all that progress from before. And then here we can see a build in 23 and a build in 24. So I think what the trend is here has been progress, but it shows how quickly a big capital project can just dwarf all that progress. And I don't know, again, once on your capital budgeting, and I'm sure there's a huge infrastructure backlog.
$130 million.
Yeah. So I would say broadly, from a financial standpoint, things have been trending in a positive direction until a big project comes.
Yeah, so, and I guess the way to sort of help with that is having, using special service levies and those type of things could help alleviate those big financial strains or no?
It could help. I know that's something the town is currently discussing and looking at. I don't know where in the process it is.
Well, I guess I'm wrong by saying that, because if we took a debenture or say a macro, because it's $1.7 million.
Yeah.
It's like a special service levy anyways, because there's a mill rate applied to that borrowing debenture. Right, so,
Yeah, like I would say that levy is more about
yeah,
how it's computed rather
Yeah.
than the aggregate. So that's why I would say it
Yeah.
could happen. I'm not informed enough about the nuts and bolts.
Yeah.
Contemplated to offer an informed opinion, but I guess the short of it is, there has been progress here made, so, credit to past groups and this group for guiding progress. And obviously, if the town is in a big debt position, there's very little incremental money to do anything. Or if headwinds come, it's hard to adapt to them. And, I wouldn't profess to say it's all figured out financially, particularly within the context of the infrastructure deficit. But I would say there has been progress made, and discipline and continuing with that progress will help lead to a better future.
and I agree that, this is where this council or the next councils that come have to look at the borrowing strategies and the infrastructure strategies and how to leverage grants to sort of reduce the impact of that big orange line that drops down
Yeah.
when it comes, but there's gonna be more of those because it's inevitable that there needs to be some more investment within the municipality to maintain it.
Yeah, and in part I see that as kind of building for headwinds and building for rainy days, right? Like sometimes these infrastructure needs have been backlogged, can become very pressing very
Yeah.
quickly. So having a better financial position to adapt, I think is beneficial and helps avoid future strain on ratepayers.
And I think that's one of the things that council has talked about for our people that are watching is that, we do have debentures coming up and that, our plan is, at this time anyways, the discussion is around moving that, debenture payment to reserves to rebuild some of the reserves to be able to deal with some of that, those bumps in the roads where we need to buy equipment and we have enough money within our own bank account to be able to not have to borrow.
Yeah, and I think like in a future perfect world when you're there, which is always an ongoing journey, like. Ideally, you could truly match the reserves to future capital requirements, and when it comes time for a new factor or a new. Water treatment plant or a new this or
Yeah.
that, it's, you know, the money's there in the reserves.
Instead of
And,
borrowing, yeah.
you know, I guess it's, on one hand, like the financial position is better, but I don't know if the infrastructure deficit is better or worse. You know, maybe they don't always lockstep either, so.
Well, my opinion is that we need to spend more. I mean, we have certain areas of town like Reeder and Bagshaw and those areas that need significant infrastructure upgrades. And Traeger Drive and those type of things. So, and I know this council's been talking about it, so it's something that we'll have to consider in our capital.
Yeah, thank you. So again, here's the context.
Yeah, that's good.
I was curious about it myself, but
Yeah,
there's a lot of it would be useful to provide some context, that there has been progress made, but again, how quickly a big capital project can soak it up, so. If we can go back to the other document, just a few last things there, to some of the smaller items. Maybe that one, I think, yeah, one to the right, please. Yeah, that one's good. If you can move. Looks like this, page 15 at the bottom. Yeah, if you can go down, okay, yeah, that's good, we'll stop at note 6. So note 6 again talks about the investments the town entered into with RBC. So there is a fair bit of just features to those investments that we do disclose, so that big paragraph you can kind of see towards the middle of the page is just going through the specifics of those investments. And then something else I would probably just briefly highlight on this page is the unearned revenue one on note 8. And of that, I would just probably point at the gas tax. There was about $1,063,000 left in gas tax at the end of 2024, where that was 1.9 in 23 and 2.2 in 2022.
Yeah.
So there's been a fair deployment of those funds back into infrastructure. I mean, which is great because then you don't need to fund it out of reserves or annual taxation or anything like that, so. Couple things maybe just briefly, next page. So note 10 does go through the debentures, and as noted, 2 of the debentures come off the books here in a couple of months with the last payment. The third one has only 2 payments after that, 26 and 27. And then the utility fund does have a larger debenture that comes off in 21 years of 2046. Maybe we could go to note 16. So note 16, what this shows is the composition of the town's surplus balances. The first is the nominal surplus for the general operating fund. So something that the province expects from municipalities is that you don't run deficits in your operating fund without plans to recover them. So here we can see there was a surplus there of 2.1 million aggregate, up from 976,000. So there was, again, a strengthening in financial position across 2024. And then the other important number here as well is the utility operating fund. The Public Utilities Board does expect that what water and sewer users pay is enough to cover the costs of running the utility. And here we can see that's still in deficit at 510,000, but it did improve from a 687,000 deficit the year before. We've seen that it slipped and it's starting to recover back. And I know there's been some rate riders and other things approved through to heal that back up.
Yep.
And we are seeing mathematically signs of that healing occurring within the utilities fund. And reserves here are also built to 7.26 million from about 6.6 million. And then note 17 is good to note as well. So this is the compensation disclosure. So 2024 was a bit of a mixed year with certain individuals coming off and coming on. But I would say that aggregate council compensation is kind of in line with what it typically has been for town of Vaughan. So I think that would be
What makes up expensive?
travel.
Just travel?
Yeah, primarily it'd be travel. There again, I would have to dig into that to see if there's anything else, but it's generally like if you go to AMM or something like that, it would be those kinds of costs.
Okay.
Yeah. So this would cover kind of the core of this document. Just knowing what other things on your agenda to stop. This is kind of what I intended to present on this one, but I do have a couple more to go through as well.
Sure.
Is there any questions on this piece or anything you may be thinking about financially that I could speak to and haven't touched on?
I appreciate this.
Yeah, thank you.
This is a good picture to look at.
Probably strive to just maintain that, and just now that it's built, it would be an easy thing to
Yeah.
provide as supplemental analysis. Okay, if we can move to those other PDFs, please, Ravi. Anyone is fine, maybe if you just go to the far left and to the right. Yeah, oh no, sorry, yeah, okay, that's good. All right, so we have Town of the Paw public sector compensation disclosure. So it's a requirement of the Public Sector Compensation Disclosure Act that the town prepare disclosure available to ratepayers who would request showing compensation over a certain threshold and for mayor and council. So we've prepared that reporting as is required under the act, and we do have an unqualified opinions. We do think it's a fair disclosure for what occurred. And yeah, the composition of the document is on screen. So it's an audit report that we've got a clean opinion on, followed by quantitative data about compensation. And it's a requirement again for that document to be available to the public by way of the town office. And it's structurally the same reporting as has been used prior. Okay, we'll move to the next one. Okay, so another reporting requirement that would also need approval, council deems it appropriate, is for the fuel tax. So there is an audit requirement for that under the agreement between the government of Manitoba and the town of the Paw. And here again, we've got a cleaner and unqualified opinion. We think it presents a true picture of the gas tax reporting. And at the end of 2024, there was $1,063,000 that was left in the gas tax fund. And in aggregate, there was 5.9 million that had come in over the years, with about 4.9 million spent over the years. And this is standardized reporting across all municipalities, but is another audit requirement. And there should be one more document, Abby. Yeah, maybe it's not there. So there is a one-page document that we're required to issue in the full act, and it's a supplementary communication. And it essentially just talks about that we've completed the audit. To the best of our knowledge, accounting procedures and control systems are adequate. To the best of our knowledge, funds have been dispersed under an authority granted by an act or bylaw. No discrepancies or irregularities have arisen. There are no other matters that we want communicated to the minister or council. And where we have had audit recommendations, they've been communicated to your management So it's a standard communication, municipal act requires it,
Yep.
and again, it's similar in structure and content to the prior year.
Any further questions?
When did you start the audit?
So this year, we started the audit, we received the submission in early June. As when we started, so it started a bit later, and we definitely had some unusual timing considerations on our side as well. I ended up getting pneumonia in June and missed some work, but we could speak to that probably in another setting if needed, so.
I just wondered, because this is, the audit is 10 months out already.
Yeah.
But you review the town finances on a monthly or bi-monthly basis at all?
No, like typically what's done for an audit appointment like this, we would generally only see kind of the numbers once a year. Unless we were brought in to do something other than that. Like we might look at certain things within the year if it just helps make the annual job easier, but there's no statutory or contractual arrangement to look at the numbers at any other point other than to produce the documents in front of you. If there's ever a desire for more feedback on internal reporting, or if there were ever specific items of concern that you wanted an external review of, we could definitely do that on request, but the usual cycle is that we see this once in a year to produce the annual reporting, unless there's been a request for something other than that. And that's just in part due to reasons of time and cost as well. Yeah, it's typically an annual thing, it's the standard arrangement. Yeah.
Any other questions from council? So again, Dion, thank you very much to you and your team for doing all the work that's been done here tonight. As well as Bola, please pass on our thanks to Laura and the rest of the staff and yourself for all the work you've done. I know it's a lot of work to get ready for an audit and to provide all the information. I guess what we need now, I believe, is a resolution to accept the audit as presented.
Yeah, that's correct. That we need a resolution and then I've got a signing package and can issue.
Do we have a document or resolution? So we could pass the resolution at our next council meeting or now, or if you give us one written, how fast do you need it?
It would be like, I don't have any particular timing consideration other than that I'd like to wrap this up.
So we just get a blank sheet, Bola, and I can just write one up real quick. Because it's really just resolved that we accept the 2024 audited financial document as presented by Baker Tilly's Dion Bird. And then I don't think there's any objections to it. We can just sign it off and then I can sign those papers. I'll sign them all, or if anybody objects one before we sign them, then I'll pull them back. She needs to sign this thing.
Yes, please, thank you.
Hey, working late tonight, eh, Ravi? Oh, no. Oh, no. That's it.
And this, the public, this statement will be available to the public.
Yeah, so just for anybody that's looking for the details, this typically will get uploaded onto our website under the financial section at the townofthepod.ca. So if they want to look through that, And I'm sure if you have any questions, you can always call the office and somebody will be able to help you out.
So the game tonight, gonna be 18 innings or less?
Yeah, I went to bed that last night. I thought, no, I kind of figured the Blue Jays were gonna win, but I didn't know I was gonna miss an entire game. I went to bed at the eighth inning.
I will recommend we wait till next council. Thank you.
If you just give me that blank, give me that piece of paper and I'll just write it out by hand.
We just,
I just want to type something.
Yeah, no, that's fine. Here, just. Do you have that to me?
if you have questions on them.
Yes.
So resolution. Number. I don't know what it is. Moved by,
196,
hey, 126,
196.
20,
The last one was 195.
25, yeah, I wasn't sure, 196, moved by, second. By. Resolve.
The statement of responsibilities or vice Joe. If you can remind me, please.
Statements.
See one stop.
Audited.
It's a requirement, everyone, yeah, all the municipalities, the province, I'm sure Canada's probably most of their financials.
Paper.
Yeah, behind Kelly, do you have anything else? Is it just Baker Tilly? Is it like incorrect? It doesn't say.
HMA LLP,
I thought it was.
What?
HMALLP. Is that what you said?
yeah, Baker Tilly,
Yeah.
HMA LLP.
The Unberg. Resolve that the 2024 financial statements audited by Baker Tilly HMA LLP presented by DMB be accepted and approved as accepted as presented. And
Thank you.
abstain. Okay, so, you wanna move and get a second on that? I can read it. What's that? Make all of them like that? Yeah, yeah. Yeah, hard surprise. Okay, so resolution 2025-196, moved by Councillor Manage, second by Councillor Commodore, resolved that the 2024 financial statements audited by Baker Tilly HMA LLP, presented by Deamber, be accepted as presented.
Just request a recorded vote.
Recorded vote. So I gotta write everybody's name down, just went to work. Door. Manage. Atkinson. Allen. Hopper. Murphy. Hey, Councillor Commodore,
Yes.
Councillor Manage,
Yes.
Councillor Atkinson,
Hi.
Councillor Allen,
Counselor Hopper
Yes.
and Counselor Murphy, Murphy. 6-4, 0 against, 0 abstain, carried and signed. Perfect.
Thank you. We
Thank
will
you.
Turn the final copies likely tomorrow.
Perfect. Thank you. Thanks again, Leon.
Thank you very much.
So can we move ourselves into in camera real quick because like I've got